Welcome back to Legal Chunks. Let's get straight to it. So gold on Friday gave us a lot of moves, good moves, and I want to break down this trade and show y'all how y'all can use simple principles combined with a little advanced principles to, profit in the market. So the first thing I want you to understand and look at is that on gold, we have a weekly bullish candlestick close from last week. This is a strong bullish candlestick close. This lets me know that the next candle is more than likely to be a bullish candle because it's so strong in pressure. It's a lot of volume in that candle. Also, you want to look at a couple other things on gold. Let me get my drawing tool over here. Yeah, we're gonna look at a couple other things on gold, including this is the higher low point. So this is the weekly higher low point. This is the previous weekly higher low point, and before that, this is the previous weekly higher low point. So we see we've been going bullish. We get a lot of expansion candles to the upside. They are strong. The black candles are the bullish candles for those who are maybe new. This is all the information I need on this weekly candle because more than likely you're not about to see a drastic move. It takes a long time for weekly candles to move. So let's go down. You can clearly see that the market is going bullish on the daily chart. You see that big uphill climb on the daily chart, but I want to just mark in some key levels so you can just get a better picture. This is my higher low point here based off the way I view structure. Higher low on the daily chart. Let's find that. Boom, boom, boom. Higher low. This is the higher high here. And I do have an area of missing price, or some would say fair value gap. That's what the name of it is, actually. I just learned it as missing price when I learned it. And it just makes more sense to me for some reason. So you have the fair value gap missing price here, which is where price launched from. So a key thing you need to understand is that these key levels are points that draws the price to it, and there are points that price likes to explode and leave from. So we also see a bullish engulfing here. So this was a key factor during this point of price action. Let us know the market wanted to start that bullish uptrend on the daily chart because we want a complete structure. Price moves to complete structure. Price moves from liquidity to liquidity, key level to key level, whether that's fair value gap, whether that's some type of supply or demand, but it's moving from those levels to complete structure. That's what it's doing. It's taking liquidity in the mix of it, and it's taking a lot of volume in the mix of it as well. Now, what we want to see is that from this level, price, we expect this to happen. We get a bullish impulse, some type of retracement, and then some type of key level to the left will push price up. The first level we expect price to hit is this, right? That's usually some type of buy side liquidity as well. Price can reverse from there and give us a retracement. However, we expect price to break that, and how we measure our where price could potentially go. We want to use a Fibonacci tool here, so I put fib out, and I would say, okay, fib on the daily chart, boom. So I'm expecting price to go here to this negative 61.8 level, and I'll make that green. And this is where I would expect price to go when I'm looking at fibs, especially on a higher time frame, because higher time frames, they hold strong. They really hold strong, trust and believe. So, so once price comes here, I'm expecting price to go there. How does it go there? Does it have to go straight there? No, it could do something like this, break, come back, break again, and then go there. But end of the day, we expect price to hit them target levels, especially on a higher time frame, because the higher time frames hold weight. The higher time frame is telling us where the market is going to go more than likely. It's highly probable, right? So with that being said, understanding fibs, we're gonna actually do higher low to higher high here. And I see that, well, I'm expecting price to go bullish, and I'm expecting it to fill this negative 61.8. Now, fields and targets don't always get hit, y'all. So don't be like, I tried it and it didn't work. Welcome to trading. Everything you try won't work, but you got to get something that's consistent to be the foundational piece of your strategy. So price goes here. We have one bullish day, bearish day, bullish day, bullish day, bullish day, bullish day, hesitation, bullish day, bearish day, bullish day. So we expecting price to get there. So we hit a bullish day. It was like a retracement day. And all we understand is that we expect price to get to this level, right? So I'm gonna go ahead, make sure it's view. So we're gonna drop down. Now look, looking at this daily chart now, we understand that this higher low is the new higher low that we trading in. We also understand that because this price has pushed so much in a bullish direction, price at any given moment can decide to retrace before going back up. It just can. That's structure. So now we move on to the 4-hour chart. And I want y'all to notice one thing. Look how zoomed in we is to that price action. We still in the same levels, but we just zoomed in now. So this level here was a higher low. On the 4-hour chart, that was broken. I would say this is a break for me. So I would expect market, and you can see this area missing price here. You go ahead and fair value gap it. So price came into here, sold off, right here, and that's a nice push bearish. If you took that sale, it gave us nice opportunities. But now we are Friday. You see that it says Friday, October 24 at the bottom. We're gonna zoom in a little more just so we can get a look at the price action. Understand this: liquidity caused this retracement. It's important to understand liquidity, and I have a liquidity video. If you haven't never seen uh or know what liquidity is, you check my liquidity video out. It's somewhere in the bio. It might pop up on the screen. I don't know. Liquidity was here, push us back to this area of missing price, this fair value gap, then pushes market down. So quite naturally, we expecting price to come to this liquidity or the one below it, because that's all we're looking at here. And another thing I want you to understand is that because we are in a weekly bullish, daily bullish, 4 hour is showing it want to go bearish, it doesn't mean it has to complete the structure, because all this is what we're looking at now. I want you to understand how structure is very, very it's just very fluid to give us certain movements in the price action. Lower high, lower low, retracement to go here. So all we just saw was pretty much this. Market comes here, here, it breaks, comes here, and now it's potentially looking to confirm that bearish structure, right? It didn't do it yet. So we had a higher low that was here, kind of a head, it's really a head and shoulders pattern, many would call it. You got a shoulder, head, and a shoulder. Higher low, higher low to higher high, lower high to lower low, break, taking the sale here, expecting to make this low, but it doesn't have to. That's one thing people have to understand. Taking these trades, man, you don't have to catch the entire move. You really don't. You set yourself up for failure trying to catch the entire move unless you are very patient and you're a swing trader and you understand that you may be up 80, 90 points or pips or whatever you trade, and a price can come back down or go against you, and then you'll have a break-even trade or even a stop loss depending on your risk management. So be smart. Moving on to the 1 hour chart. But I want everyone to understand, if I'm talking fast, I just get very passionate in my mind. It's racing. So that's just how it is sometimes. So we're on the 1 hour chart. I like to be at the charts at 5 a.m. That pre-market is very beautiful for me. And I'm looking for areas that can reverse price to go bullish. Why am I looking for areas that can reverse price to go bullish? Because I'm looking at the market here and I'm saying, you know what? If the market is going to continue and do this structure here, well, what I need to see, and the reason I'm looking for something bullish is because right now, in the short term, a bullish move would send price back up for a potential retracement off this key level, because this is a key level and this is a supply area, or some will call it an order block. I would expect it to push up here and then give me a sell off to go and take this liquidity. That's what I would be thinking. Okay. However, I understand that when you have situations like this in the market and a weekly and a daily is bullish, we're going to zoom in. We see this liquidity area here is still prominent in the market. It still has to be respected. So a lot of people be like, man, the little liquidity areas, don't worry about them. I'm telling you, this video will show you that all these wicks can be powerful, you know, when you got the right proper context. So I got the liquidity area here, but back to what I was saying. So when the market, we see this is what I would be thinking in, like, based off the higher time frame to fulfill this liquidity. But I also understand if the daily and the weekly is bullish, if this area just happens to give me enough bullish volume, this area should actually come and attack not only just this order block, this supply area, but this liquidity, right? And if it attacks this liquidity, then it can attack this liquidity like this, and then sweep it, and then go bearish. So that's a scenario two I'm thinking. So I think in a scenario basis, but most of the time my entry, I'm gonna be in so low. Like I'm getting in as soon as the market turns when it turns. Okay, that's just how I trade. Excuse me. And you will see as this video continues. But I'm expecting it to come here. I'm expecting it to come here. Now, if price action breaks this buy side liquidity level, then it's looking like I want to go back up and revisit that 4 hour area missing price, or it's showing me the price wants to realign with higher time frame structures to continue to push bullish, just like the higher time frame show. And that pushing bullish will be going to what level? This target. Remember, I'm still thinking this target is going to get hit, but I don't know how long this retracement will last, but I'm just trading it based off how I'm thinking. So we're going to go down to the smaller time frames, such as the 15. I'm just showing y'all how I think on the markets, man. Hopefully, people are able to understand. So I'm on the 15 minute now, and I want y'all to look at something. The move from yesterday. Yesterday we had a lower high to lower low. right? It's all the same. We had a higher low being broken. And you're like, I know people wonder where my higher low is at. It's here. We had a higher low being broken yesterday, lower high to lower low. Market pulled back to what? That fair value gap area of missing price. And when did it do it? It did it during afternoon session, gave us an entry. And if you would have took this trade here, put the stop above this, because this level is really going to be an area of missing price, this fair value gap, it should hold, right? So you shouldn't be thinking it's going to break. Just put a stop above it, and then you will be targeting that liquidity area, right? But that was a trade there, just showing you inside of that how the market is just fractal. I'm gonna remove this. So now that it's getting close to 5 a.m., I'm expecting some type of transitional structure switch to go bullish from this liquidity. Just like I saw y'all on my liquidity videos, that's what I'm expecting. But I don't want to be on a 15-minute. I want to go down to like the 5 and the 3-minute chart and look for that switch. So now we're on the 5-minute chart. I'm expecting some type of reversal, right? So I would go boom, boom, still watching. Now look, I'm gonna remove these blue lines and understand that I may be going fast. Y'all can rewatch the video, and also understand this, y'all. Price is very, very repetitive in what it does, and you don't want to be one of those people who go against the patterns, right? So it could reverse from the 3-minute, the 1-minute, the 15-minute. But when this structure breaks, I do want to become a buyer because I'm feeling like let's continue to watch, for example. I'm feeling like, you know what? If price is breaking bullish at a liquidity level that's saying it's sell side, it's probably sweeping and taking that sell side and coming up bullish to complete that retracement. Everything that I thought was happening on the 1 hour chart, the price could come back to the 1 hour. It's like it's about to happen. When I see that punch into that liquidity level, then the market starts to come up. That's what I'm thinking. So this break for me lets me know, oh, okay, it's gonna come back to an area of missing price or fair value gap or order block, or some people call it demand. Whatever you want to call it, I don't care. I'm not one of the people who I just don't care. I'm not in this trading space to be somebody's, whatever going on. This is a very weird space to be in, actually. So we break this area. Once this area broke, this is letting me know, okay, I get a retracement. I want to go bullish. I really do. And if I buy, I want to put my stop below the low. Okay. So we go here. Now we see that wick. Boom, boom, boom. Understand that the fibs is an important part of this game. And it's just very important to understand how the fibs work. So we got the higher low to the higher high. Price is retracing to this area missing price. Now, some people, they like to buy it on a touch. Some people like to buy it when it gets to the middle of the fair value gap or area missing price. And some people don't trade fair value gaps at all. So it's all up to you. Once the price gets here to the middle, let's say we put our stop loss below that low. That's a 26, 25 point SL. And I'm gonna show you multiple ways to enter this setup. So just be patient with me. I'm gonna show you multiple ways to enter it. So when price comes here and you're gonna target, because remember, we go to the 1 hour chart, we remember this buy side liquidity is where we think the price is gonna go, or at least here. So if we target here, that's a 3.56 risk reward ratio. That's a nice move. 3.5, 3.6. That's a good RR, good risk to reward. So you're gonna continue to watch price. Okay, I didn't think it was gonna move that fast. But as you can see, let me go back. No, I just do it like this. But as you can see, price came in here left. We did face some drawdown for about 5, 10, 15, 20 minutes. But what I want you to look at is the 1-minute chart. All right. So inside of this level, this 1-minute level, and I'm gonna make this only on I'm gonna take this on the 2-minute chart real quick. So inside here, we can still, I want y'all to understand, we still going to see structure, but this level, because it should be switching from the sell side, this price action should begin to put in bullish structure now, because bullish structure is letting me know that the market wants to go up to my buy side liquidity. Structure is the GPS. Structure is the vehicle to the destinations of liquidity and the destinations of key levels. What am I saying? The market is going to move in structure because structure is the GPS in the vehicle. And the destinations, when you get a GPS in, you type in the GPS, you type where you're going and you type where you're coming from. Price is going to come and arrive Pause. That was crazy. That was crazy. Price is going to arrive and price is going to be leaving from key levels, right? So think about price as that GPS and structure is the vehicle. At key levels, you want to hop in the vehicle of structure when certain things happen. And you want to stay in that structure, that vehicle, until you get to your next destination. That's how structure is. Not gonna do another deep video on structure. If you want, just let me know so you can really understand it. But what we're gonna look here is that momentum. Once this area breaks here, boom, 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 boom. This red area, I had a bullish candle and a bearish candle. That let me know that this was some form of resistance. And this resistance is broken strongly. Market comes back and revisit it. You can buy from this area, right? So let me go ahead, just put it like that. Now let's say you buy from this area. Once it, retraces in there, let's go here, boom, boom. 15-point SL, right? Now, you can just be fine with a 1 hour trade. It's nothing wrong with being a 1 hour trader. I wish people stop feeling like I only can take 1 hour and I'm not a good trader. You are a good trader. You actually got a skill set to take anything out of the markets with a consistent eye and consistent action. You're a good trader. Don't get caught up in this RR race of 27 hour and all this other wild shit. Don't do it. But anyway, 1.5. So this is 15 points we risking here. And I like to go for 50 points when I'm scalping. But bro, sis, I'm telling you, that 1 hour, if you want to do 1 hour, that shit is going to hit fast as hell. So if you're risking 500 to get 500, wow, it's in there. But that's neither here nor there. That's not for this video. That's for another video. Sometimes I really just get, really too, I get passionate about this shit, man. I've been doing this for years. So, okay, we're going to hold this. Your first target level would be this level because this is that 5 minute high. So if you just held it to here, you get a 2.8 R reward. Okay, that's beautiful. Now, let's go back to the higher time frames and remember what you want to target. Remember, we targeting overall at least that. So if price does go here, now you got a 7 R trade. See the difference? How we got a momentum switch on the 1 minute chart, and that let us know momentum was switching bullish, and I already got a 5 minute structure showing that we could be going bullish. You see what I'm saying? Confirm as well, it's more confirmation than just saying, okay, I'm at a fair value gap. I'm at this missing price level. I want to buy it here, put in my stop below the low. Both are effective, but one of them just has a little better risk reward. Okay, that's all. So the market is to come there, and I'm actually gonna remove this because I don't want to. I'm gonna go to the 2 minute. I don't want to show these on no other time frame. So I'm about to be marking up. So let's watch how price plays out. Remember, the first target is that level. It already hit. Boom, boom. Now it's 7 a.m. This is when I feel like New York is getting ready to pop off. That's just me. We go down to the 1 minute chart and just look at price. Guess what? Look how smooth price flew from that. And then structure should begin to form, right? Structure should begin to form. Why? Because the market is a GPS. Now, you probably never heard that, but you have to listen to me break it down like on a different video. But I understand the market's GPS. I understand the vehicle, and I understand the way in which it goes. The vehicle follows a certain direction. And structure is that vehicle of price action. I'm telling you right now. It shows you the direction, but the arrival places, right, and the places we depart from are the key levels. And once you can understand that, it makes it way easier. So I got multi-candle pullback, break, market still pushing bullish, and we just gonna continue to watch. Look at the arrival. Look at the arrival here. We got another higher low. Now look, a lot of people may say, "Oh, it broke the area here." If you're using that same concept with a bullish candle and a bearish candle created a resistance, then a bearish candle and a bullish candle should create a support, and it does. It does create a support, but you know the difference. The difference is that although this does create a support, I don't care about this because my analysis was going bullish. And although this can cause a further retracement, I don't even have a key level to trade off of that with. So it's no confluence in that trade. All right. So we're not going to worry about that too much. We're going to continue to watch. We got another multi candle, boom, boom. And we just continuing to watch structure, see how market looks and plays out now. Crazy. Comes here. Now we got a support, bearish, bullish candle. Boom, boom. Oh, we got a break. So what should happen here? Boom, a clean break. So now we see a break of this momentum and a key 1 hour level. We already understand that that price that has played out from earlier. This is how it looks on the in price action. That's how it looks. So when we go down to the 1 minute chart, I'm thinking, hey, you know what? If it broke this momentum, this telling me momentum is coming in bearish. Now I can potentially capitalize on this. What? An area of missing price again. Now, a lot of people are like, whoa, missing prices everywhere. It really is. It's really a dope concept, man. I really like the fair value gap concept. I don't know if people use it like me, but hey, this is how I use it. I don't really care what other people do. You have to get that mentality in trading because you'll find yourself following 300 different people because they got Lamborghinis and they're not giving you no type of value at all. They're not even trying to tell you nothing about a chart. They can't break shit down. They don't have any nothing. They just here. You know, you don't want to be fall into that materialism trap of a trader. Trading is really hard work, challenging work, but it's worth it once you get your system. So I would expect price to come back here, put my stop above this high, and there it goes. Boom. Now, remember, we want to trade. You want to trade that 1 hour. There's 15 right there. And actually, your stop below this, right above this high, can be about 12. So you'll be like a 1.2 R there. If you want to go ahead for that 2 R, you go ahead and be about 24 points. Now, some people will be like, well, if this 1 hour zone is going to hold, it should go all the way down here. And it should if it's going to hold. But we don't know if it's going to hold. That's why we understand the smaller time frames. You understand the lower time frames, you're able to see the details so you can get into price action and different setups. So here we go. Boom, boom, boom. Price played out beautifully. Price played out beautifully. So we had two trades here, opportunities. This was more of confirmed entry, and that one would have played out as well. Then we got one trade here. You can be done. It's not even 8 o'clock yet. You could be done for the day, and this actually went 33.48 points. I mean, I'm sorry. This risk reward was pretty much 3.5 R risk reward. So just understand the day. You ahead, say if you risking, 500, you done made 1,500 setup. You could be done for the day, man. Go back to the 5 minute chart. Let's look and see what's going on. Okay, we got that. I want to keep this chart clean for y'all. Be authentic. Now, when the market comes back down here, I know y'all like, oh, it's the area, missing price here. Why won't you trade that? I have a certain context I look for, not gonna just trade it in the middle of this like this. Although we are down there at the 50, price, should come to the 50 level. Because price likes to make new highs, new lows, and come back to at least that equilibrium part of 50. There it is. Then it bounces from it. So I wouldn't have took that trade. I'm not gonna cap. It's not don't fit my requirements for entry. But we're gonna continue to watch price action unfold. And what do you see? Just so y'all, let me go down to the 1 minute chart to break something down to y'all real quick. Look here. You get a lower high here that is broken. Some multi-candle pullback, then an impulse. So there you go. Lower. This is a very risky trade. So I wouldn't trade. I like to trade from higher time frame zones. That's me. Uh, I don't like to trade from a 1 minute zone. I'm hitting the wrong thing. There you go. 1 minute zone. So this is a break of structure and this is a break of momentum. Now notice how we had that, right? Momentum break. Momentum is very powerful in the market if you can understand it. And if let's say you even took this trade from here, you would have went up about 10 points or whatever. You would have went break even. I mean, it would have been out like 15 points, but let's watch the market. Boom, 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 boom. And remember, I showed this here, how you can, take advantage of those break and retests. What are the odds that happens? And this is a trade that's risky. I wouldn't, like I said, I wouldn't take this trade. It's just showing like a proof of concept. You take a trade in there, 15 points. Say you go for that 1 hour. That's powerful. You go for that 2 hour. You already achieved that as well. So just continuing to watch price. Price exploded, right? And price has yet to hit the liquidity. I know you like it hit liquidity, it didn't hit it. And it's very petty like that. So we got here. This would have been a 4R trade. Let's go back to the 5 minute chart. Let's remove this. Actually lead us to the 2 minute. Boom. Now we see that now we have a multiple candle pullback. I love the multi candles. That's like my trademark. Shout out to Thanos for that. Um, Now we can see that we have a, I'm expecting price to come here, 15 minute. I mean, 5 minute zone here. And I'm gonna see the area of missing price as well. So your 5 minute area missing price. So price can come back here. And this is where it gets very, very tricky. Nah, we've already made, this is just a trade breakdown. We've already made money. We've took setups. Most of the time, it depends on how frequent you want to trade. As a scalper, you probably should look for maybe 2 to 3 setups a day. But one is good enough when you got the right amount of capital. Like, we don't have to be these people who, you know, you don't have to flex, man. Live your life. You know what I'm saying? Get your setup, whether that setup make you $100 a day, $75, 2,000, 25,000, whatever. If you trading a one-to-one, like y'all see what I'm showing y'all, if you're risking 500 to make $500, you've made $500. And most people who trade scalping models with 1R have higher win rates than people who trade 2R because price doesn't have to go as far. So like you can have a 70% win rate with a 1R system and you can make just as much money, if not more, as somebody who has a 2R system, but a lower win rate of like 50%. So it's something to think about. Take what you can get out the market. But this market needs to hit this liquidity level. That's my issue right now. Let's look at the liquidity. It hasn't hit that liquidity level. You know, we wanted to hit liquidity and then okay, so we wanted to hit that liquidity and then come back down. So this is where it gets tricky for people. It's like this is a clean 5 minute setup. I will expect the market to come back down and go bullish. Let's watch. There you go. Now I look for something in here. I'm not gonna say if I seen it or not because I ain't look, but we're gonna put the stop right below this low. We can do that. And we would target this liquidity. We still want to target that liquidity. That's a 1.87. And people are gonna say, man, why would you trade that? I'm telling y'all, 1Rs add up. I'm gonna keep saying that. I'm gonna keep saying it. Go ahead, boom. So the market does reverse. We have some price action here to look a little shaky. And we can go down to that 1 minute chart and see if we see a momentum switch. Now we don't really see a momentum switch, but we do see a break of momentum. By momentum switch, I mean we see it actually break momentum and go bullish? No, we didn't. And if we come here for the sell, I'll just show you this as well. Do we see price break momentum? Yes, we did. It broke this level. It's off the bodies, not the wicks. And it actually did come here to this area missing price. So this area, this is something that you will have to back test, and not only just back test, you will have to really understand. It's other principles and different values and characteristics of this particular trade. But if you're risking 18, you want that 36, you got it. That's for 2R trader or whatever you want to be, taking it to this key level or whatever. But that was a good trade as well. So understand we can trade multiple ways. So if you enter on that zone, the 5 minute, you're just watching the price action and we just gonna watch. Boom. Now look, check me out. Understand this. This would have probably took you out at break even because you damn near was up 50 points. So you was up this amount of points. I think I was at the 2 minute. You was up about 1.4. So once you up about 1.4 or 1R, you want to roll that to break even. So let's just say this is a break even trade. Okay. Price came back. If you wanted to re-enter that, you could have re-entered it. I'm not about to go through that like right now. And then what do we see again? We see momentum did, there was a momentum switch again, but we had no reason to get in that trade, no opportunity. So, boom, boom, boom. With the proper context, we go on the 5 minute chart and price did explode and just kept going out. When that second line comes up, I'm done trading for the day. So price actually did come back up to that 4 hour area. And I did actually look at this trade too. This is another trade opportunity. 5 minute area. Boom, boom, boom. Higher low on the 5 minute. So there we go. It did come back to this key area here. It did hit it. And then that could have been bullish. I didn't get my entry signal for this, so I didn't take it. But you could have took that trade and got you about, what, 50, 40, 50 points. And let's just watch and see what it did for the rest of the day. I don't know. Excuse me. Oh, it exploded. Mm-mm-mm. I know that NAS hit it like a little reversal. Yeah, so that's just the trading, what happened. Price hit this level and it I wanted to hit this liquidity, it attacked it. That's when the trade is pretty much done. And then once it broke and then start giving us bullish structure still, we want to trade that. We go to the 15-minute chart and we see how it's broken. Go to the 4-hour chart, you see it's still in that liquidity, but we gonna delete that because based on how this daily candle closed, remember, it closed bullish. The daily candle, the last previous daily candle was bullish, so we expected the next one to be bullish as well. So that's how it looked. Open, low, high, close. And that's pretty much it. I'm gonna go to the 1 minute so you can see. I mean, go to the 2 minute where I put all the entries for the day. So this entry here that was 25 ended up being a 3.61 R. If you headed to that zone, if you headed to that liquidity, it would have been 5 R. This one is a 7 R if you headed to the zone. If you headed to the liquidity, this is a 9.69 R. Now we know this went further. So just imagine those liquidity, that opportunity that you had there. But you can be scalping all these big moves that's going, this move went 100 plus point, 100 plus. You can just take 10 or 20 out. You feel me? I mean, you gotta make sure your SL is big enough. So you could just be taking 20 out of each of these moves, man, risking 20 to take 20. You feel me? It's cool. If you did that, that'd be 20, 40, 60, 80, 100, about 100 points on the day. You feel me? It's just all about your perspective on 1R versus 2R trading, man. But this is an introduction to momentum, understanding the way in which I use it. And I haven't really went into detail of the characteristics, but man, I am Legal Chunks, man. I hope this video gave you some type of knowledge, some type of information, something that you feel you can use in your trading. But I am Legal Chunks. Like, comment, share, and subscribe. In the next video, I will be talking more about the 1R versus 2R system because I really want you to know, is that a myth? Is 2R really better than 1R? Stay tuned.